Hi, we are from Group 3. My name is Siti Nur Shahira. Together with me is Komati, Hignesh Warren and Chin Simin. We will be analysing the financial statement and corporate governance of Axiata Group Berhad and Maxis Berhad from bankers' perspectives as well as from investors' perspective. Maxis Berhad was established in 1993 by Ananda Krishnan and becoming the largest telecommunication company in Malaysia. Despite the impact of COVID-19, Maxis Berhad managed to deliver the best service to customers, keep engagement with stakeholders and ensure the stability in business performance and financial. Maxis Berhad believes this pandemic accelerated the digital lifestyles of the world. They will continue to innovate new opportunities beyond their core business and ready for 5G deployment to serve the community. Axiata Group Berhad is a diversified digital business that was incorporated in 1992 and now with a field of vision that spans over 11 countries and employs more than 12,000 employees across South Asia. Axiata Group Berhad built strong, diverse talent based in the three distinct business segments of digital telcos, digital businesses and infrastructure to develop digital ecosystem to add value to the nation economy and create sustainable future of shared prosperity. The challenges of COVID-19 pandemic did not stop Axiata Group Berhad from delivering better than expected results for 2020. They continue to focus on business continuity and support the needs of government and local communities.
Hi, I would like to present about which company should be invested by the investor. In our opinion, if the investor look at corporate governance practice of Maxis and Axiata, investor can invest in both companies as they have very strong corporate governance practice. First of all, according to the corporate structure of Maxis and Axiata, this company balance the power of chairman and CEO instead of duality board that concentrate the power in a single individual. The investor do not need to worry if there are the members of minority shareholder, as these members are protected by the Minority Shareholder Watch Group MSWG in Maxis and Axiata. The CEO must answer the inquiry from MSWG in the AGM meeting. So when the board and the management are monitoring each other by balance the power, this ensures the benefits of everyone is involved. Second, Maxis and Axiata are strongly practicing in zero tolerance policy against bribery, corruption, money laundering, or any illegal activities that may negatively impact the company. According to their corporate governance report, they are regularly review their policy, implement effective anti-corruption tools such as MABC system by Maxis, compliant maturity model by Axiata, and they set up whistleblowing channel for internal and external parties to report if acknowledge any unethical behavior or illegal activities to the board and the management. This indicates that Maxis and Axiata ensure all transactions and activities are compliant and help to avoid financial risks that may impact on the benefits of the shareholder or investor. Maxis and Axiata encourage transparency culture. Their financial documents are clearly and accurately stated, which are accessible and available to be reviewed by the public, so the investor can feel secure and confident to make their investment decisions on both companies. Lastly, due to the impact of COVID-19 in 2020, Maxis and Axiata put much efforts in data privacy protections improvement than past year. The transformation of work structures from physically work at office to remote works from home, Maxis and Axiata implement multiple training and development to enhance their employee, suppliers, and vendors' knowledge on utilize their digital platform with strong security and understand the obligations of data protection. As a telecommunication leader in Malaysia, data privacy and security could be a competitive advantage for them to attract potential investors who are sensitive on personal and health information. The good governance practice and security system on data protections help to prevent the risk of data leakage and maintain the good reputation of the company. When the loyalty level of consumer is high by continue using the service of Maxis and Axiata, this helps to boost the trust and confidence of investors to invest in both companies. Therefore, we suggest the investor can invest in both companies based on their excellent corporate governance practice.
Hi, I'm Hignesh. I'll be sharing first the investor's perspective of two companies. The two companies that I'll talk about is Axiata and also Maxis. So both, before moving into the detailing, right, on a positive note, both Axiata and Maxis is one of the leading telecommunication company in Malaysia. So that is already a positive sign from an investor's perspective because they have a large market capital and also financially they are more secured and also stable in the market position. So moving into the details, usually investors will look into the liquidity ratio. Liquidity ratio is how quickly a company can quickly repay back their debt. So from investors' perspective, is usually is the best ideal is from 1.0 or above. But in this case, both the companies are having a ratio less than 1. But however, if you want to compare Axiata and Maxis back to back, then you can realize that Axiata slightly outperforms Maxis in a liquidity ratio. Means that Axiata could repay back their loans or debt much quicker than Maxis. So that is a positive sign from an investor's perspective because the risk is minimized when a company has could repay back quickly their debt. Next, I'll discuss about the asset turnover ratio from an investor's perspective. So this is a good indicator of how efficiently the business is running by recovering the revenue using the asset. So if you look into Axiata and also Maxis, it is quite evident that Axiata outperforms Maxis in this particular ratio. If you notice back in 2018, there's already a difference of 4.2% better ratio performance compared to Maxis. And then they gradually increase their ratio difference margin up to 22% in 2020. So it is quite evident in this particular ratio that they are using their asset to recover revenue even better. Moving on, we'll look into the profitability ratio of these two companies. So profitability ratio is obviously one of the important criteria from an investor because they want to look into how much company earn the profit in relation to the revenue in their balance sheet. If you look into Maxis, their profitability ratio is actually slightly higher in 2018 and 2022 compared to Axiata. Axiata outperforms Maxis in 2019. So if you look into the past 3 years, obviously both the companies are profitable, but they are not very significant difference in both these ratios. So I feel that from an investor's perspective, both the companies are profitable, and this ratio are also a positive sign from an investor's perspective. Lastly, an investor will look into the dividend policy ratio. So this is an important ratio for an investor because this is a ratio of the net income over the sum of the dividend payout to the shareholders. So an investor would like to see good dividends payout from the companies that they are investing. Both Axiata and Maxis has a ratio of less than 1 and also above 1. Whenever it's above 1, an investor is obviously more delighted because there is a substantial amount of payout being provided by the company. In 2019, Maxis payout a ratio above 1 and also Axiata payout in year 2020. So this is a good indicator of both the companies are giving a substantial consideration dividend rates to their shareholders. So an overview, we can look at both of these companies neck to neck in comparison of ratio, but there's just a slight margin that Axiata outperforms in specific ratios. So from an investor's perspective, I think Axiata has a better prospect in a long-term progression.
Hi, I'm Kamati and I'll be discussing about the banker's perspective on financial statements. Bankers evaluate financial statements of companies to evaluate their performance, and they look into several criteria into a financial statements. It's impossible to directly compare the figures of two companies because they might be on a different range. Thus, they evaluate ratios. Ratios indicate the performance of a company. The first ratio perspective a banker would see is the gross profit margin.
Gross profit margin is the key indicator of a company's profitability. A banker expects to see a rise in this figure over the years. However, a drop will concern the banker. With this said, the analysis shows Maxis have been having a decreasing trend on the gross profit margin. However, Axiata have been having a fluctuating pattern. It's hard to compare a companies with fluctuating and a decreased pattern. Thus, we look into the figures. The figures indicate the higher the gross profit margin, the higher the profit of the company. Therefore, Maxis has an upper hand on this The second ratio a banker will look into is the accounts receivable turnover rate. Accounts receivable turnover rate is the indicator of how fast a company can collect its accounts receivable from its clients. Bankers expect to see a rise in these figures over the years. A decreased pattern on these figures over the years indicate the company's credit policy has been worsening. The bankers would be worried if the company can actually collect the money that it owes from its clients. From the analysis, Maxis have been having a decreasing trend on this accounts receivable turnover rate. However, Axiata has been having an increased trend on this, proving that Axiata has been on the stronger credit policy over the years. Thirdly, bankers would look into the liquidity ratio of the company. Liquidity ratio indicates the ability of a company to pay up its immediate debt with cash resources. Bankers would expect to see a rise in these figures, and a crisis on cash is devastating for firms that are growing. Bankers would think that the firm does not have enough cash to pay up its debts. Bankers evaluate two different ratios on these liquidity ratios. Firstly, current ratio, which they expect to see a 3:1 ratio, and next is the quick ratio, where they expect to see a 1:1 ratio. From the analysis, Maxis and Axiata did not meet bankers' expectation on these ratios. They have been having liabilities more than its current assets. Thus, analyzing the figures, Axiata have been having slightly better ratios compared to Maxis on this ratio. Lastly, bankers would evaluate the debt ratio of a company. Debt ratio is a ratio of debt to its assets. Bankers would want a company to finance in assets $1 to its $3 borrowed. On the analysis, Maxis and Axiata have been doing fairly well on this ratio, where Axiata is on the lead. On the overall, we can say that Maxis and Axiata have been very closely competing, and nevertheless, Axiata is slightly better in most of the ratios evaluated. If a banker's perspective is to choose one company, it would be Axiata over Maxis.
Beside the points explained by committee, there are also non-financial elements that bankers might look out from the company, which is based on its corporate governance practice. Character of the lenders, for instances, is one of the important aspects that bankers will look for in its possible lenders. Among the traits that are most important are the successful prior business experience, referrals by respected community members, community involvement, and if there is evidence of care and effort in the business planning process. If we relate to the corporate governance practice, competent board and management plays a vital role in building excellent character of the company. Current corporate governance, focusing on diversity and independence of the boards, as its task is dealing with issues that are highly complex and technical in nature. By having diversified members of the board, there will be many perspectives on the table for good decision making. Comparing Maxis and Axiata in terms of this aspect, both companies exceed the minimum requirement of the independency of their boards, which is more than 50% of their board made up by the independent directors. Other than that, their boards also made of diversified skills, experience, nationality, age, and gender. Other aspect that the banker may look for is how the company manage their risk by aligning their strategies with goals. The company should have a developed and mature company risk tolerance and risk profile. the board to ensure that the company has the proper framework and controls in place to monitor the risk and mitigate when it is necessary. Based on this aspect, both companies have the risk control framework established and monitored by their board. When comparing these two companies, there are multiple criteria that are verified by bankers and investors. Bankers see the company's performance based on how stable they are to repay the loan or their liabilities. However, investors evaluate the company's performance based on how much gain they can get from investing into the company. On the corporate governance, each company has its strong and weak sides. Each of the company's strong side overtakes the weaknesses, which leads to a decision that both companies will be an eligible or equal candidate from an investor's perspective. However, looking into the financial statement, Axiata seems to have an advantage or slightly better performance in comparison from Maxis. From a banker's perspective, on the other hand, most of the ratios that are taken into consideration prove that Axiata has performed better than Maxis. In a nutshell, from the analysis, we can conclude that Axiata has slightly better chance in both bankers' and investors' point of view. Nevertheless, Maxis is also a strong competitor in a sense that the comparison points are not yet very far off. They have a very close tracking with Axiata throughout the analysis. Thus, both the companies would be a good investment as well as stable company for financing. Thank you.